Sir, there's a GC right there, Cliff.
Go.
It's piers. They got concrete piers and wood piers.
Yes, sir.
Checklist. Check out the checklist. We got it for everything we need.
Yes, sir.
Right, you forget some things sometimes.
Mm-hmm.
So this is going to outline, make sure you hit every single thing. What's the foundation, plumbing, electric, painting, flooring, everything. So you don't miss anything.
Okay.
You want to make sure you get all your checks.
Okay. I want to introduce you guys to Cliff Hunter. Cliff is a world-renowned flipper. He actually flips. He's also a GC as well. He's a good contractor. When it comes to all of our renovations, all over the nation, you'll talk to this guy right here.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner Dale back in the saddle again for another edition of Real Estate Friday training, guys. Man, thank you guys for typing in with your partner, man. It's just gonna be me today, man. Our partner Cliff, man, he's a little bit under the weather, man. So be praying for him. He feels better. He's fine as far as physically, but he's a little under the weather. It's gonna be your partner. It's okay. I still live better than you. And yes, I got the bag, man. But yeah, this is gonna be a really good one, guys, man. We're gonna dive in this. We ain't gonna waste no time at all, guys. Current market analysis. We're going to dive into this real quickly here, guys. Well, what's going on here, guys, when it comes to the current market analysis, there's a lot of news going on when it comes to real estate, specifically around the Fed and interest rate cuts, guys. And what has happened is a lot of times is a lot of investors are already looking at and already taking the P's and Q's from what the Fed is going to do, right? What they're going to do as far as cutting rates. Are they going to cut rates or not? Well, guys, man, there's a warning that came out, guys, from Bank of America, man, that was not too really good. Bank of America, they came out and said, hey, the Federal Reserve interest rates are frozen until 2025, really March of 2025. That's what they're talking about, guys. That's crazy. And they're even thinking that rates may not be cut at all as well. And also they're anticipating maybe even an increasing rate because of what's going on in the economy, man. Let's go and dive into what's going on here, guys. And let's tap in and see what our partner is talking about here. This is RE Consulting, guys. Follow them on all social media platforms. Let's see what's going on. He's going to talk about Bank of America and the warning of the Federal Reserve interest rates frozen until 2025 because the Federal Reserve came out and said that they're not going to cut any rates at all this year. So they went from, guys, now, I was out here hearing. They went from 6 cuts, which was proposed late last year, then to 4, then they say going 2, now we're at 0. 0 now, and I told everybody, it doesn't make sense for them to cut the rates. Everybody kept telling me, Dale, man, but if they don't cut the rates, Dale, what's going to happen is they're not going to be able to, they're going to really just destroy the economy. And I'm like, but if they cut the rates, they're really going to destroy the economy because Congress is still pretty. But let's see what Bank of America says, guys, and we'll tap in. Let's see what's going on. Here we go.
Bank of America economists just issued a dire warning, everyone. They are now speculating that the Federal Reserve is not going to cut interest rates until 2025. And that's if they cut interest rates at all. With Wall Street pushing out rate cut expectations.
That's CNBC, guys. CNBC. That's what this is. This is CNBC is saying this. Okay? Here we go.
With Bank of America economists saying that there's a real risk that the Fed won't cut until March 2025 at the earliest. Now, folks, this is a massive shift because only 3 or 4 months ago, Wall Street was predicting that the Federal Reserve was going to cut interest rates as much as 7 times in 2024.
Oh, Joe.
Now we're hearing that they might not cut interest rates at all or that they could even hike rates with the financial.
What you say, Chuck? Hold on, come back to you. What you say, Chuck? What you say, Chuck? Didn't I say that before? I anticipated a market crash up, right? Which means they're going to increase the rates up, right? So I was saying this earlier in the year, guys. I was called a buffoon, conspiracy theorist. I know what I'm talking about. Just all other stuff. Me and Cliff debated this as well. A healthy debate on this, man. So now you actually have Wall Street coming out and saying, hey, they're anticipating maybe a rate cut in March of 2025, right? If even that, and then what they're saying is this here is, and it may even be they're anticipating a market a interest rate hike, not a cut. Man, so I told y'all, math, numbers, data, not hope, data, numbers. Let's keep going, guys. Man, this is good. Here we go.
Financial Times reporting that investors are pricing in a growing chance of another Federal Reserve interest rate rise.
Yes.
With options markets now suggesting a roughly 1 in 5 chance of a U.S. rate increase within the next 12 months. And so, folks.
Hold on. Come back to you. Man, this is so good. So he's saying in the next 12 months, they're anticipating a rate increase. I told y'all the Fed is the biggest PR agent on the planet. Told y'all, man. Again, facts and data are on really my side. Because when you have two parties, the federal government and the Fed, the Federal Reserve, who are active partners, and one of those partners are not acting in accordance with financial standards, i.e. the federal government, printing upon printing, which causes inflation, you get this reality, guys. Again, facts, numbers, data. Let's keep going, guys. We're not done, y'all.
Folks, let me tell you, if the Fed doesn't cut rates or actually increases rates, this changes the ball game completely on the housing market and the stock market.
Yes.
Because both of those asset classes are still in raging record bubbles in 2024. In particular, everyone, the value of the U.S. housing market is now at 159% of GDP.
That's crazy.
A $45 trillion housing market value across all houses and land compared to $28 trillion in GDP.
Wow.
You can see that the only other time the housing market's been this overvalued compared to GDP was back in 05-06.
Yes.
Before the biggest crash of all time. And so think about that, everyone. Home prices are now 59% higher than the aggregate economic activity in the economy. I mean, there's no historical precedent for that.
Guys, I want you guys to hear what my man Zenim is saying. He's saying that houses are overvalued, which means there is a correction coming. You can only BS for so long, guys. You can fuzz the numbers for so long, guys. Come on, man. They changed how they calculated inflation. They changed that. We're going to talk about stagflation here in a second. They changed that whole thing. And then they began to fuzz with the numbers when it came to the unemployment. All that. You can only spend for so long, guys. This is asinine. Now, hold on. We're not done with the haymakers, guys. Remember he talked about how the housing market is 59% overvalued, and he gave you a kind of a comparison of 2000 by 2006 news. And let me give you a news flash. That's when I bought as much properties. When that decline came, I bought someone's real estate for cheap, and we're waiting for that time to come now. We're buying it right now. Cliff and I and our partner James, we're buying it right now. So much real estate on sale, below wholesale, because we understand facts data. We don't have an invest in hope strategy. We do have hope, right? But we have a plan, invest, right? Execute, and then hope. That's what's going on, guys. Most folks have no plan, so you have an invest in hope strategy. That's all you have. So you believe the spin coming from the Fed. And when you believe the spin, you negate all standards, facts, and data, because your whole mentality is grounded in an invest and hope strategy, guys. We got to stop this game, guys. This is crazy town. Most individuals that I talk to today, they're really concerned about the economy. specifically the volatility of it. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. Now, guys, let's dive into another problem right now, guys. That problem is, here's another issue that no one's talking about at all. You remember the issue concerning the commercial banks, guys? You remember that issue? Cliff and I actually did a real estate training on that as well. And that right there was earth shaking. Well, guys, there's another report that came out, man. These reports are coming out like crazy. $962 billion due. Nearly 300 banks could fail due to the collapse of the commercial real estate sector. Most of the balance sheet that own banks, when it comes to real estate, are in the commercial real estate industry. And so now we have this earthquake coming, this tsunami coming with $962 billion due, guys. Let's listen to our people from Valuetainment, and they're going to talk about, guys, they're going to talk about what's going to happen with this. We're talking about nearly 300 banks could fail, and you're going to see who's going to acquire them. Again, facts, data. Here we go.
Why hundreds of U.S. banks may be at risk of failure. CNBC story. You could see some banks either fail or at least, dip below their minimum capital requirements. Christopher Wolf, managing director and head of North American banks at Fitch Ratings, told CNBC consulting firms, Claris Group, analyzed about 4,000 U.S. banks. And here we go. Listen to this. Found 282 banks faced the dual threat of commercial real estate loans and potential losses tied to higher interest rates. The majority.
So stop right there. So that report right there, guys, is saying the reason why there's issues with the commercial real estate sector is because of high interest rates. And because of the rates, right, because of inflation, which means too much fake currency flowing to too few goods, you have to charge a high interest rate because the Fed is trying to burn out the excess cash, but you have Congress, its partner, continuing to print money over and over and over again, which causes the problem. Hello. Let's keep going, guys. We're not done. It gets a little scarier, guys, man. All right. You have to know where you are so you can know where you're going to prescribe the right solution. Here we go. Let's dive in. We ain't done. Here we go.
Majority of these banks are smaller lenders with less than $10 billion in assets.
Look, again, smaller banks. You remember, guys, we had that problem with those small to medium-sized banks. Here we go. I told you this was coming. This is not me bragging. I'm looking at facts and data, guys. Data. Most of these small companies, guys, what they actually have is these small to mid-sized banks. They have a large share of commercial real estate, guys. And guess who's going to be there right there to actually cash in and buy them? We're going to see in a second. Here we go, guys. Let's get it in.
Most of these banks aren't solvent or even close to insolvent. They're just stressed, Brian Grant said.
Okay.
Co-founder and partner of Claris Group told CNBC. That means there will be fewer bank failures, but it doesn't mean that communities and customers don't get hurt by that stress, Tom.
So there is a crisis that's about to happen.
Come on,
so he's saying, you heard what he said? There'll be fewer bank failures. What do you mean fewer bank failures? That's like saying, hey, when the hurricane just passes by, there'll be less rain. But it's still raining.
Yes.
So that's what's going on.
Man. keep it 100 with me. Don't pee on me and tell me it's raining. Just give it to me, big dog. Come on.
Here's a number for you. $962 billion of commercial paper refinancing in the next 18 months, ending around end of second quarter next year. So actually,
and I'm going to be buying all that. I want to buy a nice amount of that type of paper at a discount. You see opportunities now? You see it? Do you see it? Let's go.
We're coming up on a year.
12 months, yeah.
Yeah, it's 12 months out. I was thinking since the beginning of this year. $962 billion.
Nah.
Now, if the rates go down, that way they could refine. Oh, wait a minute. The Fed just said the rates will be higher longer. Uh-oh. So there may be fewer bank failures, but there's going to be bank failures. There's going to be commercial real estate that goes into receivership.
Yes.
And this isn't going to be like 1928 and the Great Depression.
Of course.
You're going to see a ton of this stuff, and the big private equity firms and Jamie Dimon are ready for it because their balance sheets are ready to pounce.
And it's interesting.
Did you hear what he just said, guys? See what he said, guys? Thanks to Barry Tamer for that. You see what he said? Guess who's waiting in the wings to buy these small to mid-tier banks? Jamie Dimon, J.P. Morgan Chase, Wells Fargo, Bank of America, Citigroup. They ready because they have the balance sheet so they can leverage, and the cash on hand to be able to take advantage of opportunities. Do you have that, guys? Do you have that? This is, guys, this is, I think you understand how big this is. This is huge because most of the balance sheet when it comes to small to mid-tier banks is commercial real estate. That's exactly what it is, guys. This is not, man, that's huge news. That is huge news. Get ready. Get ready, guys, because there's going to be a ton of opportunity. He said 18 months, guys. $960 billion is due in 18 months. Nearly $1 trillion is due in the 18-month time frame. Good God. Whether you are a seasoned or novice investor, we all know that with uncertain times or volatile times, that creates opportunities. Now, with these new opportunities, only the implementation of the correct strategies will separate that average investor from that great investor. There are 3 strategies that, if implemented the right way with the correct team around you, any investor can go from 0 to 6 figures, maybe even 7 figures in the next 12 to 24 to 36 months. Click on the link below or swipe up and let's talk through these strategies. All right, guys, let's talk through a term that you're going to get very familiar with. All right, get very familiar with the meaning of what this term is because it is here. It is here, and it's going to happen, guys. That is stagflation. So, what is stagflation? I got you, baby. Don't you worry about it. Your partner's here with you. Let's read what stagflation. Stagflation is this here. It says stagflation is an economic cycle characterized by slow growth and a high unemployment rate accompanied by inflation. Now, I know what a lot of you guys are actually saying when it comes to this definition, but LaDale, we have a low unemployment rate, right? Again, the devil is in the details, guys. All right. Now, come back to me for a second, guys. Have you looked at the numbers when it comes to unemployment? Have you looked at the numbers, guys? I want you to look at 2 different things, right? Number one, when it comes to unemployment, when you dig into the numbers, did you know that most of the unemployment, right, rate is based on non-American born workers or lower than actually higher than American born workers? And guys, when it comes to the jobs are leaving. They are, as far as full-time jobs, are leaving, guys, and people are getting more part-time jobs. So you have American-born workers right now that are below non-American workers. You see what I'm saying? And most of the jobs are part-time jobs. You don't believe me? I figured you were not at all, baby. I got you. No problem with it at all. So now we understand what that is, guys. Let's go over here real quickly. Here, boom. I want y'all to see this. This is from EJ and Tony, right? I want y'all to read this to make it bigger for everybody in the back row. I want you to see what he's saying, Doc. He says this here. I'm gonna make it a little smaller. All right, here we go. He says layoffs everywhere, but not a claim to file? Question mark. At this point, there is no good explanation left for what is going on with uninsured claims, right? Either initial or continuing. Not only is nothing matching up anymore, but the rock solid steadiness of these levels makes even less sense. What he's saying is what we're being told in the media doesn't match the data. It didn't match it. You can only spin for so long. I know this may be one of those boring type of episodes, and it's not fiery, but you need some of these minutes to let you know shit coming. It's coming. And those that actually bury their heads in the ground, I'll be right there buying up all your assets. I'm going to buy them boys, man. Why? Because we ready. Are you ready, guys? If the answer is no, don't you worry. Your partner's here to help you get ready. I got you, man. So, guys, let's go back to stagflation again. Burn this on your brain. Stagflation is an economic cycle characterized by slow growth, which we have, and a high unemployment rate accompanied by inflation. All three of those factors are at play now. So understand stagflation is right there. Now, let's go a little deeper on stagflation, guys, because I want you to make sure that you actually understand this term. Let's go to my partner real fast, DB, Dan Bonzino. He's going to talk about this real quickly and go into why this makes sense this way. Here we go. Let's see what he got to say. Here we go. Boom.
This picture. I showed it yesterday as kind of a little bit of a teaser. I want you to remember the 1980 election. You may be saying to yourself, well, I wasn't alive for the 1980 election, or maybe you were.
Now, he's using 1980 because that's when Jimmy Carter was the president, and what's happening right now is kind of mirroring it a little bit, but ours is more catastrophic now. But listen to it. Here we go.
It's fine. You don't need to be alive. I just want you to look at this map because the map is pretty devastating. When you see all of the places that Jimmy Carter, who was the incumbent president, won, they were very few. He won West Virginia. He won Rhode Island. What else? Minnesota, Maryland, and Hawaii. And he got smoked everywhere else. Do you know how hard it is for an incumbent president to get absolutely destroyed by at that point it was Ronald Reagan. Reagan basically like eviscerated this guy. What was going on at the time? Foreign policy chaos, the hostage crisis overseas, very bad. Nobody likes chaos, right?
Here we go.
But stagflation was going on too.
Stagflation. Listen to that part right there.
Very red, as you can tell. Very red. Everywhere. Oh, George.
That was the election between Jimmy Carter and Ronald Reagan. As you can see, Ronald Reagan smoked him because of one thing, stagflation. Listen.
Too, where Carter was from. It's not good. Folks, I don't want to get ahead of myself because red wave talk is absolutely prohibited. I'm just saying now, if we can keep the distractions out and stay focused with the chaos and the censorship and the bullshit and stagflation, we could be in for a very good night. Could. I want you to watch this video. I love this guy, Peter St.
Listen to this real quick.
This guy's great. He does these videos. He's talking about stagflation. In other words, it's two things, economic stagnation and inflation.
Correct.
Both of them are bad, but put together where the economy's not growing,
correct,
where prices are,
correct,
apocalyptic.
Listen.
For any president.
Listen.
Last week, we got some ugly economic numbers confirming what I've been warning, that prices are jumping while the economy is grinding to a halt. As Business Insider put it, quote, the U.S. economy may be barreling towards stagflation, an outcome worse than recession. That's quite the understatement. In fact, the last time we went into stagflation in the 1970s, we got years of double-digit unemployment, together with years of double-digit inflation, and it took interest rates hitting nearly 20% to finally knock it out at the cost of twin recessions that at the time were the worst since the Great Depression. Wow. So forget Maestro Jerome Powell's soft landing. He may have screwed us all the way to the 70s. In fact, JP Morgan's CEO, Jamie Dimon, said just that the economy, quote, looks more like the 70s than we've ever seen before.
Yes, it does.
You know, what's that line? I hate.
So guys, I played that because I wanted you guys to see an economist talking about how they come to a conclusion on stagflation. Again, guys, stagflation, that definition for the people, for the folk in the back row. And I want you to burn this on your damn brain. Okay? Burn it on your brain. It's very simple. Here we go. Let's go back to it. Stagflation is an economic cycle characterized by slow growth, which we got, high unemployment, which we really truly have, and accompanied by inflation. All three of those factors are there, right? It's real simple because of the fact that the federal government is continuing to print all this damn money, right? We're passing these little stupid ass bills, right? Which is trash. And what's happening is you have all this inflation. Whenever you have the federal government and the Federal Reserve not walking in concert, inflation is here. And then when you begin to spin and lie to people concerning the numbers, you walk right into stagflation. In my opinion, this is a plan. This is the plan, is to walk us into stagflation because of the fact. There was a report that just came out now that the Biden administration is putting together a plan right now, guys. I'm saying it's not to be political, but to let you know how money is being printed at a record amount of pace. They put something in play right now for Obamacare to now be offered to illegal immigrants. Let me say it again for the folk in the back row. They have put together a plan for Obamacare, which is government-backed insurance, right, to be offered to illegal immigrants. What that means, more printing of money. This is why I said this is part of the plan, is to run this thing into the ground. That's the plan. We got to keep it 1,000, guys. It's time to put out our big boy pants now. The plan is to run this thing into the ground because the steps that I'm seeing right now is to do exactly that. Run this thing into the ground. Why would you widen the circle from a financial standpoint and begin to issue out more money, right, to cover illegal immigrants for Obamacare? More money. Trash. Horse manure. Garbage. That's what it is. Come on, y'all. What is your plan? If it's invest and hope, trash plan. No problem. What's the real estate counter move? Y'all here for solutions, not just me talking about the bad news. See the good news, guys. Man, how can I say this, man? This strategy right here, joint venture real estate investing, is going to be the most powerful move you can do right now. What is joint venture investing? I'm glad you actually asked. That's when if you are an investor and you're actually trying to acquire real estate, guys, right? And you may not have the credit profile. What do? You bring someone on that actually may have the credit profile. Or you may have the credit profile, but you don't have the experience. No problem. You bring someone on that has the experience. Or you may have the credit profile and the experience, but you lack the capital. You bring someone that has the balance sheet that can actually partner with you. That's called joint venture investing. Who does that? Simple. JP Morgan Chase does it. Wells Fargo does it. Bank of America does it. Those sound like banks. Yes, they are. Yes, they are. Life insurance companies, they do it. All the big companies did it. Magic Johnson, do you know what he actually did when it came to him partnering with Starbucks? Starbucks never partnered with anyone else besides Magic Johnson. Joint venture investing. Investing is all he did. That is it. That's all he did. So if the big boys could do it, why don't you do it? I can do that. This is the reason and why when people bring me deals, I'll say, guys, I'll teach you how to find the deal, vet the deal, right? Make sure it's a good deal, structure it the right way. I'll bring the capital and we can partner together. Why? Most investors that come to me, don't have the investment balance sheet, experience, credit profile, or capital, so I step in and help out. Because why? I've invested years in doing this. You saw in the first in that first video with RE Consulting, he compared today to 2005 and 2006. I made so much money during that time frame when that dip actually happened. I made so much money. I bought so much property for damn near nothing because I was prepared. I was prepared. That was it, guys. This, to me, is going to be the biggest shift in wealth in American history. Why do I say that? Because of the fact that I believe the purpose of this administration, this government right now, is to run this thing into the ground. Why am I saying that? Because what they're doing is that does not make fiscal sense. It doesn't make any sense at all unless you're trying to run it into the ground. And that's what they're doing. Don't believe me? Look at it. How is the condition of the economy? How is the condition of our border? How is it? How's our foreign policy? How are the monetary policies? What bills have been passed that helped you out? Kitchen table issues. How much more are you paying for groceries? You put two and two together. So what is your plan, guys? What is your plan? All I'm saying, guys, is joint venture investing, right? Let me give you guys an example real quickly so I can make it a little bit plain for you guys. Let's walk through the power of joint venture investing, okay? Here we go. Let me bring up my calculator real quick, guys. Give me 1 second here, guys. Boom. And we can walk through this thing together, right? Now I'm going to use a simple strategy, okay? All right, here we go. Now, guys, here we go. Get that the way. Now, watch this. Let's say, for instance, guys, you are acquiring real estate right now, and you actually have a property that you're buying on sale right now. Let's say you bought it for $15,000. And why am I saying $15,000? Because I bought a property literally last month for $15,000. A 4-bedroom, 2-bathroom house in a nice city. All right, $15,000. Now watch this. The as-is value was about $20,000. So I got it below, but kind of below wholesale, which is great, right? Now watch this. Now the after-repair value is $110,000. Now let's say, for instance, you don't have the credit profile, or no, you don't have the credit profile, or you don't have the cash, or you don't have the experience. No worries. Now watch this. Let's say if you structure the deal to where it is a profit split. Let's say 50-50, as an example. Let's just walk through the numbers. We bought it for $15,000, right? I bet $15,000. Boom, $15,000. Come on now. Boom. There we go. Boom. Bought it for $15,000, right? Here we go. Right? We put $42,000 into it. So we're all in right now, guys. $57,000. All in there. All in at that number. Remember that number, $15,000. The after repair value, right, is $110,000. Typically, you can refinance 75% of the after repair value, or ARV. So that times 75%, guys, is $82,500. Remember, we're all in at $57,000. So 825 minus $57,000, guys. Boom. My profit is $25,500 on one deal. And none of that money right there is taxed because it's new debt. It paid off the $57,000 debt, right? So there's just new debt paid off old debt. I take on $25,500 non-tax at all because it's new debt. Now, how has my net worth grown? Now, I put $25K in my bank, right? Now, let's divide it by 2, because remember, it is a joint venture. Boom. So you put $12,750 in your bank account. Boom. Tax free. Now, remember, guys, the property is worth $110, right? This is the power. Look at this power. But you are all in $110. Here we go. Boom. But remember, you had 75%, you at 82.5. Now watch this, guys. 110, right? Minus 82.5, right? Your net worth just grew $27,500. Your net worth has just grown 27.5 off one deal. Watch the power. Let's say, for instance, you actually did this once a quarter. Once a quarter, not once a month, once a quarter. There are 4 months in a quarter, four quarters in a year. So 27.5 in net worth times 4, right? Boom, that's $110,000 of what? Net worth that you have grown, right? So now you're worth $110,000 more on your balance sheet. Remember, balance sheet is what you can use to leverage. Now what about the cash, LaDale? Remember, 25.5 was the take home divided by 2, because remember, joint venture. Boom, 12,750 times 4. So now you deposited $51,000 in your bank account, non-taxed. Non-tax. We're not done. So you put $51,000 in the bank. You've grown your net worth to $110,000, right? On your balance sheet. We're not done. Remember, we're in the cash flow business. Let's say, for instance, the typically when it comes to determining what the rental rate is, guys, it's typically about 1.25% of the value. So boom. So that means the monthly mortgage payment that you can bring in, the rest of you can bring in is $1,375. Not bad, right? Let's just say, for instance, guys, okay, $1,375 is what it is. Remember, you had 82.5, I believe is what it was. 82.5 times typically the rate, guys, and I'm gonna use the interest only rate on this one. The rate will probably be around let's say about 8%. Boom. That's what you're paying on an annual basis divided by 12, right? Boom. Now that's $550 a month, $550 that you have to pay per month. Remember, guys, $1,375 is what you're bringing in gross, minus $550, right? It's $825. $825 a month. Now let's just say, for instance, out of that, let's say, for instance, your taxes and insurance is probably going to be around about, I'm gonna say what, $200 a month. Here we go, no problem. Now you're at $625 a month in gross. And I'm sorry, that's net. Divided by 2, guys. Boom. You're bringing $312.50 per month in positive cash flow. Remember, you're doing 1 quarter, so that's 4. So 312 times 4. So now what's happening is you're adding $1,250 annually in positive cash flow. That ain't bad, is it? That's not bad at all. I'm sorry, forgive me. No, that's per month. Forgive me. That's $1,250 per month in positive cash flow. My bad. Forgive you, partner. That times 12. My fault, y'all. That's $15,000 annually that you're bringing home net. So let me get this straight. Let me get this straight, guys. Let me get this straight real fast. In this example, you formulated a joint venture partnership, right? Which is pretty cool. With this joint venture partnership, you put $51,000 in your bank account, tax free. You've grown your net worth up to $110,000, right? So that means you can borrow more if you need to, and you've added on an annual basis $15,000 annually, right? In positive cash flow. Where are you losing? And all you did was just structure the joint venture partnership the correct way. Guys, that's a little deal that I actually did in Jackson, Mississippi. Yes, those are the numbers. Yes, so this ain't theory. That's like actual property. Actual property. Mm-hmm. So again, guys, the power of joint venture partnerships, guys, is something to behold, guys. Hey, solo entrepreneurs get crushed. Partnerships elevate. I'm saying it again. Solo entrepreneurs get crushed. Partnerships elevate. Which one are you? I love my partners. I love them to death. Make sense, guys? But man, I hope that helped you guys out, man. I hope it did, guys, man. Me and Cliff teach this in our real estate training course, guys, which is called the Cash Flow Club. You're welcome to click on the link below, guys, or scan this QR code, guys. We talk about how to do what I just showed in this. It's on-demand training, guys. It's right there. On-demand training is right there. Because I'm always asked, can you and Cliff train us? Well, our time is kind of limited because we poured in so many different directions. But we thought it'd be wise for us to actually have an on-demand training. It's $99. You get a new training every month. It's actually updated every month because the economy is changing fast. So should your training change. So therefore, it's $99 a month, but you get access to unlimited training, and it's Cliff and I. We're having our attorneys are going to be on there. Our accountants are going to be on there. Our property managers, our bookkeepers are going to be everybody's going to be in there teaching you how to run your company. And also, we're going to be having monthly Cash Flow Club meetings for the VIP members. Once you join that, you're getting part of that VIP members. Bring your deal. And if the deal, we'll walk through the deal with you. If it makes sense, I'll fund it. I'll fund it. I will. We got a question on Instagram. We said, I just got a representation from my Amazon suggestion. Ed Darden and his friends would be okay, great. I don't know what that is. But anyways, guys, man, again, joint venture partnerships, guys, is huge. But this is the Cash Flow Club, guys. Man, $99. That's it. And what I showed you, we'll show you how to do the exact same thing. We're doing this again. We have another property closed on yesterday. Yesterday, we're doing the exact same thing. And the numbers on that are even crazier. We bought it for $20. Y'all, it's worth $130. Yes, sir, Doc. And we have our eyes on 7 additional properties on that same street. And the property that we just did right there, guys, and we're going to show you next week the before and after. These houses were wrecked, and we increased the value of it by investing the capital into it to make it livable. Putting someone into the property, and man, it's golden for us, guys. We killing the game. But guys, man, now, real quickly, guys, Hunter appraisals. Cliff is also a licensed appraiser. The one thing I tell you about when it comes to licensed appraisal, guys, it is vitally important for you to actually have part of your tool belt, your power team, a good appraiser. Cliff is a nationally licensed appraiser. If you want him to look at your deal, appraise it for you, point you in the right direction, go to hunterappraisals.com. That is all Cliff. Do what you do there, guys. And also, guys, American Rounds, this is one of our new sponsors. For disclosure, I'm a part owner of this company as well. It's the world's first AI-powered ammo vending machine located in your local grocery store. Guys, we have both Democrats and Republicans loving this product. We're going into 1,000 stores in the next 18 months. They love it because it's solving a lot of ammo getting into bad hands, the criminals' hands. We're solving this problem, guys. And it is crazy, guys. Let's go ahead and see what they got to do, guys, real quickly. Here's a promo of who they are and what we do.
American Rounds. We are in Pell City, Alabama at Fresh Value grocery store installing the first ever automated retail machine for ammunition. The stores were really the inspiration for it. I mean, they knew their customer base and they came to us and thought this would be a really good opportunity for their customer base. There's a lot of hunting community here in Pell City and thought that their customers would love an opportunity to be able to buy ammunition here at the store.
We're super excited to offer, what we think is the first ammo kiosk. We're always looking for ways to give our customer another reason to come visit our stores. Anything that we can do to help them make their shopping trips easier based on the feedback that we've gotten just from customers today. They are so excited about us having the ammo kiosk.
We're getting ammo! Woo!
One of the ways we're changing the landscape of ammunition sales is to make it more available. Being able to move into a place like a grocery store, supermarket makes it a lot more available to the public. But we're taking a different approach to it. Traditionally, ammunition is sold at outdoor type stores, your sporting goods stores, and it just sits on a shelf. It's very accessible. Because of that, there's a high rate of theft. But with our machines, as you can see here, we have a very secure automated retail machine. We're able to age verify. We scan a driver's license. It then takes 360 facial recognition for the purchase and matches it to the ID. So the machines really provide an opportunity for safe, affordable, and available ammunition sales.
There is no doubt that foot traffic will increase based on the feedback that we've gotten. And again, we're super excited not only to have it here, but in other locations in Fresh Value as well.
We're really excited about where we're going. We are going to continue to expand here in Alabama. We have a machine slated to go into Oklahoma, Louisiana, Texas. So over the next year, we're looking forward to, seeing these roll out all throughout the South and the Southeast.
All right, guys, that's American Rounds, American Rounds. Guys, go to all platforms, put at American Rounds. You locate us there. And also, you can go to AmericanRounds.com. Again, this is the world's first AI-powered ammo vending machine, guys, going into your local grocery store. Guys, I am so humbled, man, about the success of this whole company, guys. But guys, man, thank you so much for your time. God bless you, guys. Again, if you're needing any type of real estate training, guys, boom. Cashflow Club, here it is. Click on the link below or scan the QR code and you're good to go. But guys, that's all I have for today, guys. Man, you know I hit it every single time, guys. Don't get mad at me because I look better than you. Before you leave them while you can, baby. You see that thing, baby. Take that damn picture and give it to your mama now. All right, guys. See you next week. Holla at your partner. Peace. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God.